Thank you, Terry, for joining today, me for this conversation. So, what I'm seeing across the country, that a lot of investors, including my clients, when they're coming to me, they're like, Sanjeev, what is the minimum number I need to invest? I see Sydney or Melbourne property prices like more than $500,000, $1 million. I don't have that kind of deposit, and if I'm going anywhere, maybe it's not a wise investment. So which amazed me, because the opportunities are across the country, and 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 that's where we are seeing, right? And that's what I thought. Like today, I will discuss the opportunities across the country and go state by state, each of these states, because opportunities are everywhere and people can buy within those states or across multiple states, and literally they can buy properties less than $300,000, and they are still good capital growth, low vacancy rate, and positive cash flow properties. So thanks for joining me. And so for the guys who don't know about Terry Ryder, he's one of the Australia's leading real estate research analyst, a writer and a commentator from last 1982. He's also founder of hotspotting.com.au. So if you have not gone to the website, please check out that. There's a lot of information on the property research. I myself follow him, and today I have the privilege to have a chat uh, to him directly, which is going to be helpful for me and for you guys as well. Uh, Terry is also one of the respected and renowned property experts and can be seen easily on all the social channels, including all the news channel, TV shows. So now it's really a privilege to having you today, Terry. So thanks for joining us.
Not a problem at all, Sanjeev. It's great to be here, having a conversation with you about my favourite subject, which is real estate investment, and in particular the research side of it. I think it's just so important that investors go into real estate investment with good research resources. It's the key to success, I think.
Yeah, no, very true. I think property is all about the research and knowing the numbers and the data. And I think you are one of the person, I think, where the media is throwing all the negative news. And I think that's one of the major reason I see a lot of people who have even the right intention to invest and have the money, just because of the negativity. It's just impacting them, and you're the one who just bringing all the positive, working hard and fighting, and providing all the stats. So now I really enjoy reading your articles and the information you provide. So
yeah, I think it's really important, Sanjeev, for your clients and property investors generally to tune out. I call it white noise, all that media static in the background. I don't think they're really particularly interested in providing useful information to real estate consumers. It's about generating clickbait headlines, and a lot of it's just purely misinformation. When you look at the real data, you see there's quite a different story happening out there. The other problem with media, of course, is that they're obsessed with Sydney and Melbourne, the two biggest cities. They're the two places that are most affected in a negative way at the moment by the pandemic. Meanwhile, out there in the rest of Australia, where 2/3 of Australians actually live outside of those two big cities, there's a very different story. There are a lot of positive markets. There are a lot of places with very low vacancies, very active buyers, and good prospects for growth. And we're going to talk about some of those today, and I think it'll be great information for your listeners.
Yeah, that's good. So, and which we are going to talk about the areas like they have seen the boom actually, right? And it's really has been strong, and there was no impact. So, should we start with lucky New South Wales?
Yes, by all means. I think it's important for people to understand that not only are there good places to invest outside of those big cities, but the data shows in the last 5 years, for example, their best capital growth has actually been in the smaller centres. The regional centres have actually outperformed the big cities and capital growth in the last 5 years. And I expect that to continue in the next few years because a lot of the growth momentum in property markets in Australia right now are actually in some of the smaller capital cities and in the regional cities, far more so than the biggest ones. And so I think that's a great fact for investors to take on board because it's actually in those more affordable areas where they're going to get the best prospects for growth. So it's a win-win-win situation for investors. Sanjeev, the first win is they can buy more affordably in those places. The second one is they get much better rental yields. And the third one is they've got great prospects for capital growth if they choose the right location. And that's what we're going to talk about today, that the best places to buy affordably for under 300,000 across Australia.
And true. And then the best part is like to buy in these regions, you don't need a lot of money, deposit or serviceability, right? And plus it's low risk. Something happens, then no, you're covered. It's not big dollars. So yeah. So I think in New South Wales, I think just to show talk about say Albury, Wodonga, like Albury is on the New South Wales border and Wodonga is in the Victoria, right? But if you're looking at these suburbs, like say in suburbs like Lavington or like North Albury, people can literally buy for a property less than 300K.
Yeah. Well, that's right. Some of the suburbs of Albury, Wodonga, I mean, it's two separate local government areas, but it operates as one city, and there's an invisible line, dotted line on the map that divides them. That's the state border, but effectively it's one city. Lavington median house price is 280,000. North Albury is actually even more affordable, 240,000. There are a number of other suburbs in the twin cities at the border where the median house price is below 300,000. There are a few which are in the sort of low to mid 300,000s, and people should keep in mind when they look at a median price, if it says median price 320,000, they're still going to be able to find properties for below 300,000 because a median price of 320,000 or 330,000 means that half of all sales are actually lower than that. So they shouldn't be put off from looking in an area that's perhaps got a median price above 300,000 because they're still going to be able to find properties in the 200,000s in those locations. And Albury Wodonga's a great case in point. The reason we like it, we're not just pointing people to areas that are cheap. Of course, they have to be places that are affordable, but have good prospects for growth. And we think Albury Wodonga is one of those places because it's got such a strong local economy. It's got a wonderful location. It's a very strategic location. A lot of very big companies have their warehousing and logistics based in Albury Wodonga because it's say 3 hours from Melbourne, 3 hours from Canberra, and a little bit further to Sydney. So they can access a huge proportion of the Australian population from Albury Wodonga within a matter of a few hours with their, if they might be a big supermarket with their deliveries, for example. So it's a very strategic location for that reason. That's one of the reasons why it's such a good place to invest and why it's got a growth economy.
Yeah, I think a lot of investors are focusing right now in this market, and it's a lot happening. Like say, the vacancy rate has been literally like in Lavington, like 0.2, in North Albury, like 0.7. It's like crazy, the rental demand, right? And if we see the yield also, it's like more than 5.5% one can achieve, and maybe more. Like if someone is ready to go and do some maybe renovation, or given Albury is in New South Wales, like one can easily put a granny flat, right? And you can have maybe 8% of yield easily. So low entry point, good positive cash flow, and the growth is going to happen because I think it's a lot of population. I think the stat says, like according to the 2016 census, it was around 90,000 population, and just in next over the 10-15 years, it's going to be around 123K, which is like 50% population rise, which is not like a lower number. It's significant, right?
Yeah, and the population is growing for good reasons. It's attracting more and more people to live there because people are. One of the great movements in Australian real estate at the moment is what I call the exodus to affordable lifestyle. And Albury Wodonga is one of those places where people are moving. Some people are exiting the big cities because with with technology. For example, they can work remotely. They don't need to be in the city, so they can move to a place like Albury-Wodonga, have a much more affordable lifestyle, but it's a city which also got good prospects for growth. It's growing because it's a strong economy. It's a diverse economy. The lifestyle is good. People can access, the river, the mountains for skiing. There's all sorts of lifestyle elements that can be accessed within and just outside of Albury-Wodonga. So it's not only a very affordable place to buy, it also offers a great lifestyle and an economy that's growing. So there's prospects for people to have jobs and careers in a place like that. So, and yes, as you pointed out, the vacancy is incredibly low. I mean, all of the postcodes across Albury-Wodonga have vacancy rates. I think the highest is 0.7%. I mean, and some of them are close to zero. Means there's just nothing available for rent. It's great to be a landlord there at this time, because that obviously means that anything you put up for rent is going to be have queues of people wanting to rent it and wanting to pay a high rent. So yeah, good place to consider.
And I think these areas have even seen like good significant capital growth just in the last 12 months. And
yes.
like North Aubrey itself, I think it was around 12%, double-digit number, right? Which is
yeah. A number of the suburbs of Albury-Wodonga have had double-digit growth in their median prices in the last 12 months. And as you also pointed out, the rental yields, most suburbs have got median yields above 5%. Some of them are above 6%. So, it really does tick a lot of boxes, doesn't it? A growth economy, a good lifestyle, very affordable, low vacancies, good rental yields, prospects for growth. So it's one that I think should be seriously considered by investors.
Yeah, and it's very low risk, right? Because sometimes, like even when I started my investing journey, I was always cautious that, okay, what if I lose money? And then, but if I see, and that's why I invest a lot in regional myself, and because play safe, and these numbers, like you can't go wrong, right?
Yeah, that's right. I mean, I think it is I think that probably the first thing an investor should look for in choosing a location is safety. And I think this is a very safe place. It's always very steady. It's not a boom bust market like some are. This is a very safe and steady place.
Okay, no, thanks, Terry. I think let's move to the next state. I think we have to cover a bit of location. So the next one, I think, if we see at the Queensland, I think definitely in the Ipswich city, it's not far, around 40 kilometers from the Brisbane city, and it's still people can buy for less than $300,000,
Yeah.
and it's still good areas and capital happening, right?
Yeah, there are a number of Ipswich City, which is the southwestern portion of the Brisbane metropolitan area. It's certainly the most affordable part of the Brisbane market. There are others like Logan City in the south, but this one has got the greatest concentration of suburbs where median prices are below 300,000, and there are some others where the median price is just a little bit over 300,000, which means half of all sales are less than that. So, and again, rental yields very good. Most suburbs are median yields 5% and above. Some are above 6%. But the thing I really like about Ipswich, once again, we don't want people to just go and find somewhere cheap to buy. We want them to buy in an affordable location that's got good prospects for growth. And one of the most important things is jobs nodes, employment nodes, because people want to live, they want to buy a home affordably close to where they work. And so it's important that there's lots of jobs in an area. And Ipswich City and down in the southwest of the Brisbane metro area has a lot of big job nodes, and they're increasing. Big master planned estates like Springfield and the Ripley Valley are creating a lot of jobs. Springfield, for example, has a university campus. It has a private hospital. It has a big commercial precinct. It's got a major shopping centre. So all of these are major employment nodes. The Ipswich area also has a lot of very major industrial estates because land there is much cheaper than closer in towards the centre of Brisbane. And also the very good road transport links. So industrial companies with warehousing and logistic needs, loading up big trucks to send goods around Australia. But the road links are very good out of Ipswich to go north and south and west from there. And some very big new enterprises, like a $5 billion contract that the federal government handed out last year to build vehicles for the military. That's all happening in Ipswich City. It's also got a big RAF base, one of the biggest Air Force bases in Australia, which is also a big employment node. So all of that's on offer for an investor looking in the city of Ipswich, and you can buy good properties below 300,000 there.
And it's not far from the Brisbane city, right? And if you see the infrastructure going, like it's not like in millions, in billions, right? Like say with the defense, it's like a 5 million contract. I think we are talking about huge, big numbers, right? Like say,
yeah.
I think I've got like 12 billion in the Springfield community going on, and it's all in billions going, I think, and that's where at the same time it's low entry point. You're buying positive cash flow, capital growth happening, and once, so.
Yeah, it's definitely Ipswich City is one of the fastest growing in terms of population, one of the fastest growing local government areas in Queensland, and it's got lots of those big jobs nodes, affordable property, not that far from the centre of Brisbane, and great links, great rail links, and big motorway links. And the motorway which connects to central Brisbane was hugely upgraded in recent years. Now they spent over $1 billion on upgrades to make it more lanes. So it's pretty easy to, if you're living out there, to get into the centre of Brisbane if you need to. But of course, most people will actually, their lives, there's not a great deal of need to go to the centre of Brisbane. They live in Ipswich City. Their jobs are there. The kids go to school there. They can shop there because there's wonderful shopping, big shopping centres out there. So not too many reasons to actually need to get into the centre of Brisbane. But if they do, the road and rail links are good.
Yeah, I think I was looking at the population growth as well. I think in next 10 to 15 years, it's almost doubling. It's more than doubling, actually. That's the forecast. And it's right now, it's more than 200,000 population anyways. So I think when we say like all the stars in the property world, I think that's where, low risk. So.
Yeah. And one of the things I think investors need to keep in mind is what are the prevailing trends in real estate? Where are the buyers going? And one of the things to keep in mind is that the most active cohort right now is actually first home buyers. First home buyers have got a lot of government assistance, very low interest rates, and the home builder grant in particular is causing first home buyers to look to buy land, and investors could profitably follow that trend and buy in those areas where first home buyers are active, because they're going to be pushing up prices through their activity. Ipswich City is a major target for first home buyers. It's affordable. There are jobs out there. There's land available for first home buyers who want to use the home builder grant, get a block of land and build a new home. That's achievable in Ipswich City. So it's just one of those areas that will be targeted by them, and it's going to give momentum to the market and start to push up prices. So it's another reason for investors to target that location.
It's not like just a suburb, couple of suburb or something. It's like a economy and a city in itself, right? So
that's right. One of the characteristics of the Brisbane area, which is different from our other cities in Australia, is that there's only 5 local governments covering the whole metropolitan area, whereas in Sydney and Melbourne there are dozens and dozens of little council areas. In Brisbane, there's the Brisbane City Council area, which is huge. Then you've got Logan City in the south, Moreton Bay region in the north, Redlands in the east, Ipswich City in the southwest. So it's a very big, it's a big city in its own right. It's a big local government area with dozens of suburbs, and so it's a growth location as well, because there's land available for new growth. It's affordable. Businesses are moving out there because the land is affordable and the transport links are good. So it's got a lot in its favour.
Yeah, and these data are from the COVID, right? It's not like it's the low vacancy rate, the things are happening there, and it's not even impacted it, right? Um,
Yeah. Well, that's right. Again, low vacancies is a characteristic in many locations of Australia right now, and Ipswich City is one of those places. All the postcodes have got vacancy rates below 2%. Some of them are around 1%. So again, very tight rental markets, very, very strong for position for landlords to be in when vacancies are that low. So whenever a property comes available for rent, there are tenants competing for it, and that's great for landlords.
yeah, true. I think, yeah, so there's no reason why the investor should not be investing in these areas or in the current market, right?
Yeah, long term, going back in history, Ipswich City has had a very good record on capital growth. There was a period, perhaps 10 years ago, when I remember doing statistics which areas of the Brisbane metropolitan area had the strongest long-term capital growth rates, and most of the top 20 were suburbs of Ipswich City. And again, it was being targeted back then because of its affordability and the available of plenty of jobs out there. And I think we're coming into another period of growth for Ipswich City when that's happening again.
Yeah. Good. Thank you, Terry, for your good insight on these areas. I think so. Now I think I'm just conscious of your time as well. So I think we'll go a little quicker. So let's go to the South Australia. So in say South Australia again, I think it's opportunity across the entire city within, like, say, 15, 20 kilometers and that radius. And especially I was looking into the northern suburbs, which is like hardly like 25 kilometer of northern CBD, and which is the largest LGA as well, right? And like on that side, and it's still like people can buy around 300K mark. Again, the median is like 310. I think in Salisbury North we have median of $240,000, which is and it's still people can buy really good properties and not far from the city. And
Yeah.
we all know the Adelaide market for the vacancy rate has been literally close to zero. Um,
Yeah, well, that's right. I mean, low vacancies is a characteristic in many parts of Australia, but nowhere more so than Adelaide. Virtually every postcode is 1% or lower in Adelaide. It's just incredibly tight for rentals. And of course, it's a very affordable city, and it's a city, I believe, which has got a big future because I think I think it's very underrated by investors. I don't think Adelaide flies under the radar screen, and it should be considered by more investors. It offers great value for money. It's a city with some many attractive characteristics, but I think the most important part for property investors is always the economy. And Adelaide's got a bit of a reputation of being a low growth economy, but I think that's changing. It's established itself as the high-tech innovation capital of Australia. It's kind of the Silicon Valley of Australia. It's established itself as the national leader on alternative energy, like solar energy, wind farms, etc. A lot of the projects happening around Australia coming out of Adelaide and South Australia. It's also got the massive contracts to build vessels for the Navy, $90 billion worth, and that's underway. So that's a happening thing. So all of that's creating a lot of economic activity and jobs in Adelaide. So I think it's got good growth prospects for that reason. The areas you're talking about up in the north, the city of Salisbury, the city of Playford, very affordable. Probably the best rental yields you can get anywhere in capital city Australia. In some of these suburbs, the median rental yields are 6 and 7%. Some of the suburbs up in the north of Adelaide have median prices below 200,000. So it's very easy throughout those northern suburbs to find properties in the 200,000s, even below 200,000. Vacancy is very low. But for me, again, the most important thing is the employment nodes. A lot of the biggest employment nodes in Adelaide are up in the north. There's some very big industrial estates up there. It was considered a negative that the car plant closed down, but that's been repurposed It's almost completely being repurposed, that whole site, with other industrial activity. There's also the Edinburgh Defence Force Base. It's the biggest defence precinct in Australia. It's up in the north of Adelaide, and that's a huge employment nodes and generates a lot of economic activity. And there's a lot of investment being poured into that by the federal government, $1 billion expansion. So all of that underpins the property market for those affordable suburbs up in the north of Adelaide. It's almost as if their proximity to the CBD is irrelevant because they're so close to so many important other things, particularly where people work.
Yeah, no, that's so true. I mean, and that's where like what we have seen like during this whole COVID also, we have been looking at opportunities in Adelaide, and it's been so hot, like where few people have been saying, oh, where can we find a bargain? Should we buy? And on the other end, like these locations, especially in Adelaide, like it's been so hot. If you want to buy, you have to move quickly. And that's where we are saying to our investors, like,
yeah, I'm hearing the same story from other real estate professionals, whether they be buyers agents, selling agents, valuers, builder developers, and investors themselves. They're all saying the same thing, what you just said, Sanjeev, that you do have to move quickly because the market is very competitive, very active there. We're not hearing about it because media tends to obsess about Sydney and Melbourne and overlook very important cities like Adelaide, where the market is very strong. They've got the pandemic, perhaps Adelaide had the pandemic under control ahead of anywhere else in Australia. They've had no active cases for a long time. So it's business as usual there. So business is prosperous. So people are getting on with their lives. Investors are targeting the city because, for all the reasons that we've just talked about, affordability, good rental yields, low vacancies, good economic prospects. So it's one that that people should be aware of and be considering. And I know from my own experience, I bought there at the start of this year, and you're right, it was very competitive, lots of people. But at the same time, because vacancies are so low, when that property was made available to the rental market, there was a dozen different parties competing to rent it, and the rent that we got was considerably higher than we'd actually projected in our original figures. So very good experience as an investor in Adelaide so far.
Yeah, that's what we have been seeing, and it's like it's so strange. Like there's so much opportunity across the country, and literally in this whole COVID market, and like during this whole pandemic, and media doesn't talk about all this good thing, like it's happening, the market is strong, the vacancies are at low, so much going on. And we have seen even in Queensland, or like say across, like we'll talk about the Tasmania market or Adelaide, there have been 20 applications for a property.
Yeah.
It's going up, and it's no wonder like vacancy rate is like 0.5 or 0%, and nobody talks about these things in the media, and just talking about the negative news.
Yeah, well, most of our major media comes out of Sydney and Melbourne, and most of the economists that they go to for commentary are based in Sydney and Melbourne, and they think that that's Australia. They think what's happening in those two biggest cities is indicative of what's happening around the country, and it simply isn't. They're the exceptions, in fact. The places that are struggling, I think, like Melbourne at the moment, for obvious reasons, are the exceptions. That the trend is actually markets in other parts of Australia which are strong and are doing well, and prices are not falling. In fact, in many places, prices are rising. Certainly, rents are, because vacancies are so low. And I just think that many investors aren't aware of these opportunities that exist in other parts of Australia, because they're tuning into media and they're getting negativity and they're getting misinformation.
Yeah, it's a lot of misinformation. I don't know. I mean, so one is definitely the media is, I don't know what information they're looking at, but at the same time, I think, I don't know, it's intentionally they are just putting the negative news, or.
Well, that's right. I mean, in their minds, it's not news unless it's negative. And the other problem is that they often talk to economists and other analysts who generalise and talk about Australia as if it's one market. They'll say Australian prices have fallen 2% since the start of the year, and they're talking about an average for the capital cities, which is dragged down by what's happening in Sydney and Melbourne. If you take them out of the equation and start to look at Australian real estate market by market, city by city, town by town, you get a completely different picture. Mm. So one of the problems is they generalise, and the average situation might be a negative figure, and so they assume that it's happening across Australia. Well, it isn't. It's simply happening in the two biggest cities, and elsewhere there's a completely different story.
Mm. So true. I think it's just when people reach out to me and say, Sanjeev, where is the bargain, or should we buy? I just say, what should I say? I mean, like, because we see opportunity across the country, and in fact the market is hot actually in certain suburbs or within the market, right? So yeah. So yeah, I think it's definitely, and that's why I thought, like, I'll do this one so that people are across and they understand that if you're serious, there is no better time. Just do it, and right now it's a good market.
We're actually starting to see, Sanjeev, 6 months ago when the pandemic first struck, many economists, like the bank economists, for example, were predicting a big decline in real estate prices. And now, 6 months later, we've seen that hasn't happened at all. And the same economists, such as Bill Evans from Westpac and the economists from ANZ and Commonwealth Bank and others, are now starting to make new forecasts that they're admitting that they got it wrong 6 months ago. And Westpac this week has put out a report where they're actually predicting some very big price rises in Australian real estate in the next couple of years in the major cities. So they're actually changed their forecast outlook completely because they've seen that they got it wrong, and that the economy is stronger. Unemployment is actually, in the latest figures, has dropped. That was expected to go up to 10% and hasn't. It's now about 6.5%. So things are a lot better than people had expected. And so now we have major forecasters like Westpac predicting actually significant price growth in the next 2 to 3 years. So investors, I think, should be positioning themselves now, because I think that's right. I think we are actually going to come into a period of strong growth across Australia as we move into recovery. The economic recovery is going to be very strongly pushed by the federal government and state governments. It's going to be led by major spending on infrastructure, which is great for real estate, but it also generates economic activity. And I think we're actually probably going to have some kind of a real estate boom in Australia, and in the very near future, generated by infrastructure spending. So I think investors need to be aware of that and need to be positioning themselves, because there are great opportunities right now to buy well. And today we're talking about some of those more affordable places with growth prospects. And I think your clients and investors generally need to be getting ready to take action.
Mm-hmm. No, you're right. I think, and that's where with my clients, I think we are really picking good deals as well, like with good capital growth, positive cash flow for sure. At the same time, we are able to pick like subdivision, add value strategy deals as well. And it's like really, and we are doing well on that side. And to add to the negativity, like when this all started, it was a surprise, and I thought, okay, what the media is saying, even I was very nervous. I was on the market looking at the properties, but shortly realized that what the media is saying and the market is totally different, because it's still hot, the prices are going up, the vacancy rate is low, there's more demand. So what is this? And then it didn't took much time to understand that it's all just the wrong news they're trying to spread, which doesn't make sense. Or maybe they're looking at one pocket and saying Sydney, one suburb, price drop by 20% means Australia 40%. Now it's all, I don't know why this kind of news comes without any data. Like they don't provide it. Like if it says, okay, 40% down or 20% down, there has to be some data, right? So they just talk without any data, I think.
Yeah, I think so.
Yeah. So I think, so we have covered South Australia. Now let's go to Tasmania. I think so. Again, in Tasmania, I think we are seeing in Devonport again, people can buy. I think the median price around $285,000. We ourselves have been buying there, and of course across other part of Tasmania. But it's another good location.
Yeah.
The yield has been 5.5%. Strong capital growth has been there in last 1 year. I think it's around 8%, and it's still growing market. And so yeah.
Yeah, no, it's a good place to consider as well. Tasmania's been very good. I mean, it's been one of the strongest markets in Australia for the last 2 to 3 years. It's still strong. I thought, I always believe that real estate markets arise out of local economies, and what's going on in the local economy is really important. So it's significant that in the latest State of the States report that CommSec publishes every quarter, that Tasmania has actually been ranked the #1 economy in Australia. It's actually overtaken Victoria and New South Wales to rank #1. It's been rising up the rankings for a number of years. It's been, for a while, it's been #3 behind Victoria and New South Wales. Then it was #2. Now it's #1. Something important is happening in that economy. That's why its real estate market has been so strong, continues to be. Devonport up in the north is a good place to consider. It's a major regional centre for northern Tasmania. It's a very important port. It's where people and goods travelling from Victoria, from Melbourne to Tasmania, the ferries operate between Melbourne and Devonport. That's a very important characteristic. So a lot of tourists come to Tasmania via Devonport. So that's important to its economy. And it's very affordable, wonderful lifestyle up there. A lot of people moving to Tasmania for that affordable lifestyle. And a cooler climate too. As the climate heats up, it's also a factor which is influencing people's decisions to actually move to Tasmania and places like Devonport.
Yeah, I have been once. I think it's for sure. So we have covered, I think, New South Wales, Queensland, South Australia, Tasmania, and now this one. Let's go to Victoria. So in Victoria again, we're looking into the Latrobe Valley regional Victoria. Again, it's a good market. I think this is one of the, very different. People can literally buy for 200,000 in Churchill. Another solid market doesn't mean that we are buying for 200,000 is cheap, means bad. Strong market. Moe we have for around median prices around 215, and I think and Mobile $180,000 actually, and Terrigal is 320 again median. So people can definitely buy around 300 and even 200,000 mark easily, and it's good location as well. I think it's around 50 kilometer from east of Melbourne, and the best is vacancy rate has been, even in this pandemic, less than 2% across these LGA. So
yeah, I think it's a great place to consider as well. Latrobe Valley is getting a lot of buyers out of Melbourne, home buyers, first home buyers and investors. It's a great lifestyle. It's a country lifestyle, very affordable. Local economy is strong, and again, I think that's the most important factor for people to consider as investors, what's happening in the local economy. Now, it was considered that it would struggle because they closed down one of the major coal-fired power stations out there, but there's been a concerted effort from all levels of government to proactively invest in job-creating activities in the Latrobe Valley, and it's actually had a wonderful impact to the point that whereas it was predicted unemployment would rise as a result of that power plant closure, in actual fact, unemployment has dropped. And there's a lot of major infrastructure spending happening, new enterprises, jobs being created, incredibly affordable, one of the most affordable places in Australia. And there's some major enterprises out there. Traralgon's got the major national headquarters for one of the most important operations for, I think it's ASIC, Australian Securities and Investment Commission, and there's that kind of enterprise happening out there because, again, businesses go out there. It's not just people moving there because it's affordable. A lot of businesses move out to these areas because the land's affordable, and they're still quite close to the big city. The road and rail links are good, and so the business is strong, and the rental yields out there, Morwell median rental yield above 7%.
Yep.
Most of the towns of the valley got median yields above 6%, and vacancies, they're all below 2%. Some of them are below 1%. So again, good prospects for investors to buy affordably in a growth economy with great rental yields.
Yeah. I think the proximity of Melbourne, and it's not, and I think it has got a lot of potential, and it's a good entry point also where people can get into it low risk and just wait for the capital growth, and it's gonna happening in the short term for sure as well, and of course in the long term, and then pick up like good like, I mean, if with big piece of land as well, so that down the line they can subdivide or do something. So
yeah, I think the Latrobe Valley is one that we've been watching for a couple of years now, and again, and as I'm sure you're finding, Sanjeev, that we hear from people who are operating there as real estate professionals and resources such as buyers agents, finding it's very competitive there as well.
yeah, that's right. I think recently we were looking in the market, talking to the agents, and they're saying, "Oh no, it's already under offer," and you're like, okay, and yeah, I think. But I think it's still there's I mean it's not that hot like compared to what we have seen in Adelaide, but it's moving very fast, and definitely a good place. I think we are monitoring and looking to invest there.
Yeah.
Yeah, I think the last one, I think the Western Australia, I think you have got a couple of good spots. I've heard of it, you talking. So today I think again we can just say people can again go to Armadale, which is on the southern suburbs, and pretty much they can buy around in Armadale for 200,000 median price, and in Seville Grove we have for around $290,000. So again, low entry point, less than 300,000, they can buy decent houses. Again, this is all we've been talking is all about the house market, right? With decent land size, has a strong population, and I think the focus in next 20 years is to, like, I think close to double. So again, a lot of population movement happening, and it's like the location is like not far, like around 25 kilometers from the Perth CBD. So
yeah. And again, the transport links are good, both motorways and rail links. As you point out, very affordable, good rental yields. The postcodes down there, the vacancy rates are all below 1%. So we have that factor again. It's quite a lot of government spending directed down there. It's Armadale itself is like a little regional centre for those suburbs, for that precinct of the Perth metropolitan area. And there's a state government authority that invests in areas with infrastructure, and they've been targeting that area in recent years and continue to do so. So it's that there's good prospects for a metropolitan precinct when the state government is directing a lot of its investment of infrastructure and government services to it, and that's certainly the case for the Armadale precinct.
Yeah, I think overall, I think the Perth has, like the Western Australia, even the capital growth has been, I think, a little negative over the last 12-month period. But I think given what's happening, I think again, and overall the Perth market the Western Australia, Perth, around everything has gone up.
Yeah, look, Perth has a great track record in capital growth. There have been periods in, say, the last 20 years when Perth has been a national leader on economic growth, population growth, and price growth for residential real estate. For the last 5 years or so, it's been in the doldrums, but it was only a matter of time before it was going to have another growth surge. and you can see all the forces gathering in Perth for that revival and another property boom. I noticed that Bernard Salt, who's Australia's most renowned demographic expert, has written a number of books, regular public speaker at major conferences, columnist in the Australian, etc. And he has recently said he thinks Perth is going to have a real estate boom for the next several years. And we can see it building in the figures. There was figures that came through in our research only this morning, which said that with the major websites like Domain and realestate.com, they monitor the number of searches that are happening in different markets across Australia. And they notice that the biggest increase in people searching for real estate to buy is actually happening in Perth, more so than anywhere else in Australia. Vacancy rates are very low there. Pandemic well under control. Their economy is starting to pump. And I think we're coming into a resources boom, and Perth always gets uplifted on that because iron ore mining is so massive in Western Australia. So I think there's a lot of reasons to believe that Perth is coming into a period of growth after 5 or 6 years of being in the doldrums. And so I think it's a very good time for investors to be buying there before prices take off, because I think they will in Perth. And I think a good time to be a landlord somewhere in Perth. And the area that you've targeted, Sanjeev, the Armidale precinct, is a good one to think about. There are some others as well around the Perth metro area, but it's certainly a good one.
Yeah. No, thank you, Terry. I think, again, this is like we have spoken about one LGA around each of the states, right? But at the same time, there are many more opportunities across each of these estates, right? And this is just to show, because otherwise we can keep talking for the whole day. So again, I think it's just for the audience to show that there's so much opportunities than they think, or the market is otherwise. So again, I wanted to say again, this is just sharing our thoughts, and it's not any financial advice that okay, go and do. Of course, check with your financial planner, accountant on what you want to invest. And in case someone is still confused or not sure or need help, then definitely feel free to reach out to me. So let me share my contact details. This is my website, investorsdream.com.au. There is a contact section which through you can contact me. And Sanjeev at investorsdream.com.au is my email address, or you can reach out via phone on my mobile. And so hope this was helpful. And thank you again, Terry, for joining me and giving your all the insights and the rich information. And then fighting with the media and then keeping the positivity up with the right information. I think so.
Yeah, you're welcome, Serge. It's always good to talk about real estate, to give people like your clients some good rock solid information and alert them to the possibilities that exist around Australia right now. Yeah. And I also think that it's a very good part of. I always say to people, before you build your portfolio, you need to build your team. It's very important for a property investor to create a team. A good accountant who understands real estate, a quantity surveyor for a depreciation schedule. They need to consult a good lawyer who understands real estate to make sure that their contracts are checked and they're buying in the right structures. And I think it's very, very smart to have a good buyer's agent on your team, because most people just don't have the time to do the research and to look for properties to buy and do all the checks and balances that need to be done to do it properly, because it's very important that you do your due diligence, and a lot of people just don't have the time. So I think it's worth engaging a good buyer's agent as part of creating a team, and then you can start to build your portfolio in a sensible and a safe way.
Yeah, that's true. I think it's a lot of leverage. I mean, in this whole property thing, like my journey. Like I was in an IT consultant, but because of the building my own property portfolio, now I've got better things to do, and like now still investing in these areas, and I'm keep building my portfolio. So I think it's all about the teal, having the right people around you who are better than yourself, I would say, and so that we can learn and grow, and it's so much opportunity out there in the property world, especially here in Australia.
Yeah. I think my parting thought for people today, Sanjeev, is you if you want to succeed with property investment, you've got to treat it like a business. Most Australians treat it as a hobby. You've got to treat it as a serious business, and most business people know that to make money, you've got to spend money, and you've got to spend money on creating your team, good advice, good research information. If you're willing to do that, you'll be successful.
Thank you, Terry. I think that's definitely a good advice, and now a reminder for everyone, including me. So, so thanks, and have a good day.
You're welcome. Nice to talk to you.